The great macro disconnect. In 2025, we read only bad news about the US, and especially for the US markets also. Punitive global tariffs, the longest government shutdown in the history of the US, ratings downgrade, and open warfare between the White House and the Fed. By every rule of macroeconomics, the markets should have collapsed. Instead, they defied gravity. Why did this happen? Start with the US Treasuries, the supposedly safe haven instrument. They were in the eye of the storm, ratings were out, but yields barely flinched for the long-term bonds because there was simply nowhere else to go for the global capital. Then look at the dollar. Despite of the de-dollarization fears and a 43-day shutdown, the greenback remained the world's reluctant choice, proving that the institution's trust was dying, but it was still necessarily alive. We saw an unprecedented rally in gold and silver, and not just inflation, not just as inflation hedges, but as a vote against the central bank independence. It happened never before, but we saw precious metals and US equity markets both rally at the same time. And then there is Bitcoin. It wasn't just a speculative bubble anymore. It became the digital gold for an era, or for people, who stopped trusting the institutional ways of investing money. In 2025, the scarcity became the ultimate currency. Despite this panic, the S&P 500 closed at near all-time highs and defied every macroeconomic model ever written. What is my takeaway on this? Macros are great for reading the weather, but they don't tell you how to sail. Money isn't made on worldviews. It is made on the ground. It is made on the investee company numbers, their products, their market, and most importantly, the character of the promoter. Don't trade the headlines. Invest in businesses.